Hit it.
It's February 28th, 2020, episode 68. I'm Patrick Ceresna.
And I'm Kevin Muir. This week we welcome Gianni Kovacevic to talk about the changing world of energy and how to take advantage of the electrification of the globe. Then what has become my favorite segment, Talking Charts with Patrick.
Then we're going to get to This Week in Trading History, where we go back to 1791 for the creation of the first bank of the United States. Then Kevin's going to share a tale from the trading desk, and we're going to get to the top 3 things to watch next week. So let's get to our feature interview.
Well, we have a real treat today where you have a fellow Canadian, Gianni, and I'm going to, defer to you, Gianni, in terms of how to say your last name, because you sound like you should be playing left wing for the Vancouver Canucks.
Kovacevic. Croatian. Very Croatian name.
Welcome to the show. It's a pleasure to have you. And why don't you tell us a little bit about yourself? What was your background? Where did you go to university?
Well, I went to the British Columbia Institute of Technology here in Vancouver, Canada. So for Americans, it's not as famous as MIT or Texas Tech, but it's that kind of school. If you just scroll to the first slide, we're going to talk about energy today. And I guess the next slide, which actually has some of my historical thinking, which is talking about energy. And I've done that because of the background I took in the 90s, where studying power systems, automation, energy, global energy systems around the world and how they work and how they're changing. A lot of the things I studied and learned in the 90s were science experiments. They still were through the 2000s, but now they're becoming commercially viable. And this is going to have a dramatic impact on basically the winners and losers of global energy. So what computers and software are to Seattle is what commodities and energy are to Western Canada. A lot of my friends are in the business. We had a couple of big boom cycles. We were investing and speculating in these various fields. And that's why my specialty is able to articulate, I hope, to audiences on this pivot and why they should be watching it very carefully.
As a Canadian, I'm a little embarrassed because, I know Waterloo University here in Ontario. And we're very famous for they're very famous for their software engineers, and Microsoft and Google come up and poach them. But I had never actually even heard of this university. Is it in Vancouver? Yeah,
it's just in the outskirts of Vancouver, and it's a well-known technical institute here in Western Canada. And people always joke, you go to UBC or SFU to get a degree, and then you later go to BCIT to get an actual job, something where you could be employable.
Okay, so tell us, you go to this, you go get this degree that gets you a job. Where do you end up out of school, and how does that work and eventually translate into the point where you're traveling the world telling people the story about modern day, technology and how it relates to automation and vehicles?
Yeah, it's interesting. So my book, which was published a few years ago, it's 26,000 copies have been printed, and it has nothing to do with fast cars. It has everything to do about a younger electrician who takes his family doctor on a journey of enlightenment to appreciate that there is this new spending class. Of course, I'm talking about emerging markets and how this big bulge, which all of a sudden in the last 20 years or so, all these, a couple billion people have become consumers like you and I. This has had a big impact in, of course, commodities, but the common bond of everything, if you look at the cover of my book, is copper. Copper is pervasive throughout the global economy. So it's for very good reason that people call it Dr. Copper, and they look at it as a barometer. If copper is not doing well, it traditionally has told people maybe the global economy is not doing well. But if you look at the graphic here, which is an important question for all investors, are we in fact at the beginning to the end of the oil age? That is a really easy prescription to write, Patrick, but a much harder one to take. Oil is going to be important for the rest of our lives. But the overarching reason why economies, the growth economies, are going away from fossil fuels and emissions is not because of the Paris Accords. It's because of particulate pollution. This is all the big cities. And the collateral benefit, of course, is that you are, in fact, getting rid of these emissions. And you look at this picture of London, people will argue and they'll gnash their teeth and they'll debate. But do you want to be having a diesel bus floating by your apartment in downtown London, even if all the electric vehicles that will be enabled in the next 5, 10, 15 years are electrified by coal, which they're not going to be, but I'm trying to illustrate a point. If that coal power plant is 100 kilometers outside of the city and a very modern one, it's still far better than having all of these different, the noise pollution, the particulate pollution, and of course the emissions associated with all of it. This picture tells you why it's inevitable. There's too much social pressure to actually address this. And now we have the tools that makes it commercially viable. You see this graphic here, guys?
1 second. Can I interrupt there 1 second? UK has actually mandated that all the vehicles need to be electric going by, what is it, 2030 or 2050? I can't remember. It's actually a date that's surprisingly soon.
Yeah, most of these established economies, and they typically don't have a petroleum endowment, so they're not beholden to the fossil fuel industry. And it's basically the more progressive ones are saying 2025. I'm talking about Israel, Norway, Netherlands, until about 2035, 2040. India, England, France, Japan, different countries like that. China as well. And so this is happening in real time. Patrick, I remember the 2007, 2008 period where with the global financial crisis like it was yesterday. That was 12 years ago. So just imagine what I'm talking about right now in real time, this decade. If you're a curious speculator, a contrarian investor, there are fortunes are going to be made by following these trends. And this fantastic quote from the German philosopher 200 and some odd years ago relates to exactly this. The problem is not so much to see what nobody has yet seen as to think what nobody has yet thought concerning that which everyone sees. I'm talking about the abstraction that is electrification. It is invisible. Very few people, unless you're actually in that space, appreciate what does it take to make all this electric circuits, what is it to make it possible. The great enabler of all of these things is copper. There's no substitute. It'll be enabled with aluminum and copper, and it's something that most people, dare I say, are ignorant to how this operates. If you're talking to at these big global energy gatherings, the biggest one in the world, in my view, is CERAWeek, which is held by Dan Yergin in Houston, Texas. It's happening in early March. This is where all the big players in energy attend this event. The ticket is $10,000 to go up there. You don't have any turkeys in the audience. The last couple years, the big theme has been electrification. For 4 days, they go on and on and on. Did you know that the word copper doesn't get a line item, doesn't get a mention? It's just assumed that the copper will be there. So there is a level of ignorance, and the arbitrage between that misunderstanding and the opportunity that plays in this relationship between the incumbent energy mix and the enablers of it and copper's role in the future of energy, I believe fortunes will be made. So
it's Kevin here. Why do you think that the market is so oblivious to this? Like, it seems pretty obvious to me. You think about electricity. Copper is the main conduit. Like, you talk about Tesla and all their superchargers, and I think it's just filled with copper. It seems like a no-brainer. Why does the market miss it?
Well, because people, correctly so, at this time, because we still haven't really got to the main pivot. They still associate copper as the PhD, the global economy. So for the last 3 years or so, everyone's been talking about a recession might be coming, China slowing down. It in some respects, and copper has only grown by about 1% CAGR growth rate. So it has slowed down. The business cycle has been paused a couple of times, and it's been very pronounced, including the summer of 2018 when the first part of the China tariffs were implemented. Business cycle slowed down. It's obvious. Anyone that's fabricating something, in particular those things that are electrical components, they bought a little bit less, made a little bit less, procured a little bit less copper, and that is the old rule book. That doesn't work anymore. As we really get to the teeth of this, Rio Tinto has been telling people that we need about as much copper in the next 25 years as was installed in the last 500. So you can choose your own adventure. When you look at this graphic here with the growth rates, you've got a 120-year copper demand chart, very reliable, and it just tells you more people consuming more things. Copper demand grows by about 2% a year. That's a pretty reliable statistic. Until global population slows down, which won't be for another 30 years, we're going to grow to about 9 billion people. That's going to give you 1 or 2% growth. But as we really get into the teeth of this pivot into electrification, because all these things are way more copper intensive, wind power, solar power, the electrification of all transportation, there's going to be times where the growth rate for copper will be in excess of 4%. And those that understand compound interest, Einstein once said, He who does not understand compound interest pays it. He who does earns it. And it's going to double. The demand for copper will double in about the next 20 years. And the only two things that are going to make this possible, aluminum and copper. And I don't worry about graphene and all these other superconductors, because guess what, guys? Copper is $5 a kilogram, and it's cheap. It's throwaway cheap. So there's no incentive for people to substitute out of this. So,
yeah.
Great. So you're talking about this kind of secular increase in the demand for copper. What about the supply side? Are we kind of, is copper suffering from what most mining is suffering from lately in terms of a lack of capital? And after the bust in 2008, basically no new mines have come on. Like, are we at peak copper, or is there supply coming on?
Yes and no. I think copper's went through many bear markets. So now the low-hanging fruit has been picked. And in a few slides, I will get into that as we transition to answer that question very specifically on where is the R&D or the future of copper mining. But what's gonna make the difference is it's like a school of fish. Why should a commodity price go higher? We've seen the most hypothecated commodity in the world is oil. And we can see that speculators can have a persuasion of $70, $80, $100 a barrel, where we saw 4 years ago when Saudi Arabia said they're no longer the swing producer, because of 1 million barrels a day differential between supply and demand, the oil price collapsed 70%. And rule number one in commodity speculation, running out of a commodity does not matter until it matters. And then it matters a lot, because the speculator gets in between, and all of a sudden you have this massive share price increase. So
right.
The global investors are still less interested in commodities. Everyone's seen this graphic. Stocks are expensive. Commodities are cheap. Who cares? The difference is it's going to be a little bit of a different dynamic as we go forward the next decade, because what you're looking at when people talk about commodities, I don't care what the fund is or what the index is, 80% of that is fossil fuels, oil, gas, and coal. The things that enable electrification, lithium, cobalt, they're an also ran. Copper, tiny. It's a small part. It's 15 times smaller than the oil market. So just because commodities are cheap and stocks are expensive, this is now decoupling. What I'm talking about specifically is my catchphrase, oil and copper will decouple in every category. And I'm not sure if that's the next chart or not, but it's the dynamic that people have to follow very carefully. You can just transfer the slide. So what does Big Oil think about this, guys? What do you think? Of course, I'm looking at Royal Dutch Shell and one of their famous gas stations, 44,000 of these around the world. What do you think is their view on this pivot?
Well, are they not notoriously slow for figuring anything out?
What they have to do, guys, is they have to disrupt themselves. And these incumbent businesses are notoriously terrible at self-disruption.
It's kind of like it's like Napster with the music business. Nobody wanted to kind of admit that their margins were coming down, right?
Exactly. Bloomberg. We've seen Blockbuster Video and Netflix and Kodak Film and BlackBerry. They understand how this works now. So if you look at their own data on the next slide, the graphic, this is the single most important graphic we're going to talk about today. So Shell understands that global energy has grown 2% per year, basically for 3 generations. But the role that electrification plays in global energy is about 19%. You can see that where we are right now. And as we go into this massive pivot into electrification, global electrification, in the next 30 years, that goes to 50%. And it's going to be these things that are very deluxe users of copper because they're more energy efficient and or they have 4 or 5 times more copper per megawatt. I'm talking about onshore wind. Offshore wind has 10 times more copper per megawatt. So what Shell has told the world, they did this at CERAWeek, by the way, last year, they will become the world's largest producer of electricity by about the year 2035. And this is not lip service. They went and bought British Gas. They paid $65 billion for it. And they understand their market cap, which is about $300 billion, over half of it is derived in selling people energy at one of their 44,000 petroleum stations. And Ben Van Beurden, the CEO of Shell, he knows that a discounted cash flow model, that portion of their profit or market cap value, if you will, goes to zero. in the next 30 years. So they have to backfill that, and they are doing it. They will sell their clients electrons. This is a huge clue. And if you understand the amount of copper that's going to be required for them to enable this, you sleep very well at night if you're a copper investor in the long run. So this is a chart that I keep.
Do they worry about this though? Like, if you're sitting here and you can see this story, does Shell see this story?
Well, it's a good news, bad news story because there is lots of copper in the world. We have a lot of resources. We're not able to make them reserves. If the price of copper goes higher, it'll be okay for the next 20 years. It just right now it's not economic. So, which is why I believe engineering is going to dictate the future value of copper. We spent $100 billion looking for more copper reserves through the China super cycle. And now we see that copper is in fact decoupling from oil. This is a chart that I continue to update. It's a 20-year chart between copper and oil, going back to the start of the China super cycle. And we can see here, no one can predict the future, but I will show you now in the next few slides why I believe copper will surpass its old all-time high, which is around 2011. So this one here, a very important couple of graphs. You can see that oil, after the coronavirus was first talked about, after the new year, the oil price collapsed. So go to the next slide. You can see the first 5 or 6 days, and it's that yellow box. Copper has decoupled from oil. So if we look at what happened to copper in the first 5 or 6 days of the coronavirus, it didn't care. It went up, in fact, because we already are in a precarious situation in the world of copper. It's on an onion skin unless you have a total calamity in the global economy. So I love to use this. You can see the copper that had 11 straight days of negative performance. In 35 years, we've never seen that happen. That's because when it's an all asset class sell-off, it dovetailed to this year with the Chinese New Year, this coronavirus panic. So look at the next graphic. My friend Dennis Gartman would always tell people that when they raid the house of ill repute, they arrest everyone, including the piano player, which is exactly what you're seeing in the stock market this week. Record sell-off, indiscriminate. You name the company, everything is about 20 to 40% cheaper than it was 7 days ago. But guess what's happened? Look at the relationship between oil and copper on the next graphic. First one is box one in yellow. That's that time when copper didn't care until we really got into the fact that nobody was buying copper in China because of this coronavirus dovetailing with the Chinese New Year. And once again, oil goes for a massive slide. Copper didn't care. Copper was flat today, guys. It was 255. It was flat. Yeah. Oil was down 4%, 4% the day before, because 5% of copper producers today don't make money. And that's easy in the beginning stages of a bear market. But when you're 6 or 7 years into a bear market, that's it. The lights go off. So even if this thing is protracted, if we lose 5% of copper production in the next 60 days because of this low copper price, it offsets more than what would be impacted from this coronavirus. So what I'm waiting for is when we eventually get back to business as usual, because I don't believe the world is capitulating, it's going to be a super stimulus by the Chinese. I see them investing or allocating over $1 trillion to really jumpstart their economy once again. And these are not dollars that are going to heaven. These are not dollars being, as people used to say, building bridges to nowhere. This is going to be the things that they need to over the next 10 and 20 years, and predominantly focusing on that Silk Road investment that they're already making. You're going to see a massive jumpstart there. So this is a picture that I think depicts exactly where we're going in the next few years. Right now, copper is still misunderstood. It is going to become the linchpin in commodities for the global economy. Those countries that have copper are going to do very well.
Gianni, it's Kevin here. You're preaching to the converted because I love this story. I completely agree that China is going to print and spend, and I doubly agree that they're not going to print and spend doing old school things, meaning more bridges to nowhere and more apartment buildings. We're going to see them investing in the next generation technology. And I think you already saw that when NIO, which is one of the electric car makers, they just announced that the government was going to come, and part of the stimulus, they were going to invest and help them spend money to make a plant. And I think this is directly kind of attributable to the flu and this situation. And I think that they're going to realize that they're making more kind of bridges. Yeah, maybe it works, but this is the way to actually stimulate the economy. And this is much, much more productive and much smarter way for them to spend money. So
Absolutely.
I think it's a great story. I'll let you continue on with it because I'm loving it.
Well, at Davos, one of the most important statements that was made by Lord Stern, who understands the Chinese economy very well. And he was talking about the next 5-year plan that's going to come out right now in the next weeks in China. And they've been foreshadowing that a reduction in emissions will take place in China, not in 2030, but during this 5-year plan, which means they're going into turbo drive on the electrification of their transportation, and the charging of these vehicles will not take place with thermal coal. It will be done with all of the above, depending on the endowment you have in that part of China: solar, wind, hydro, geothermal, and nuclear, which is going to be limited emissions or zero emissions, going into hyperdrive. So they know how much copper they're going to require in the next 5, 10, 15 years. That number is going to go from the bottom left to the upper right of your screen. And that's why they've made such a big investment already in the world of copper. So where's the future of copper going to come from? And why do I continue to say it's different this time, which is a very dangerous thing to say, but it is, because we're going through a hinge of history. And when you go through a hinge of history in any kind of industry, you play by a new rule book. In the oil and gas industry, in the past 15 years, they reinvented the wheel. How much hydrocarbon can you get out of the same formation because of the innovation that they've had with horizontal fracking? A lot. You can't count that high. In copper, we spent $100 billion during the same time that oil went through a bonanza, a lot of innovation. We didn't find anything, guys. There's very few high-grade world-class deposits, and grade falls and falls and falls. And this is the definitive information. Of the 14 largest copper producers, the average grade of the majority of them is at 0.6% or lower. There's just no metal in the rock. You talk about innovation. We already recovered 91% from the typical copper mine. So if you go to the next slide, if you look at the future of copper, some of the success that we did find, and these are the 19 largest copper development projects that are not yet owned by a major. And what's the average grade of these projects? It's lower than 0.4. In fact, it's lower than 0.3 for a lot of them. So if we aggregate it, 0.3% is the future of copper mining. And you do not need to do a feasibility study today, guys, because if copper right now is $2.55 a pound, correlate that to the LME, that's about, 5,000 some odd a ton. If it's 1% copper, a ton of that ore is worth $55. If it's 0.5, it's worth $25. Well, 0.3 is the future. It's worth $17. You don't have to do a feasibility study. It almost guarantees you that the copper price has to make what you're looking at right here has to eventually become economic. Otherwise, you simply will not get more copper. So if you look at the next graphic, so this is almost a guarantee that if the first question is, do we need more copper, and is the CAGR growth rate of copper going to be, I believe, to fulfill all this electrification, and the demand doubles the installed copper base the next 20, 25 years. I don't lose any sleep on that. I believe that understanding electrification, that will take place. There will be demand. Your business is going to be strong. If you make cable, you're going to sell more cable, which means you can pass it on to the client. They will pay because business is good, except the bottleneck is going to be the copper mine. So we will see the copper price, which is the black line. It should be the reverse perhaps, surpassing its old all-time high. And the engineering is telling the industry, telling the world, if they actually appreciate it, that this is what's going to be required if you're going to want these low-grade resources to become converted into reserves and eventually copper mines. This is a decoupling. I don't see oil leading this charge anymore. And you give me $150 oil, which is possible, but it's only because of overwhelming negative politics somewhere in a sensitive area. You give me $150 oil again, I show you a country like India, like Japan, like China, like Germany. They just substitute away from it faster than they would have previously. So I'm a contrarian. That's our philosophy. We want to have exposure to copper. And like Ben Graham used to say, I want to buy from pessimists and sell to optimists. Right now is a classic contrarian environment for people that want to speculate in these what are the future of copper mining or lower grade resources that aren't yet copper mines.
So it's Kev again. What's your favorite way to play this? Do you like the companies, or do you like owning the actual commodity? And how do you go about expressing that view?
Well, I founded Copper Bank a few years ago with a group of friends to buy some of these copper projects that are well situated, had a ton of money spent on them. They have an economic study, and they're just not economic at sub $3 copper, which, by the way, is over 75% of the world's projects are not economic below $3.50 a pound. And this is according to BHP, the world's largest integrated miner. So it's the whole of the industry, just like I explained why the futures are lower grades. So we're buying, if you can believe this, Copper Bank has a market cap at 6 cents a share of 18 million. We have 4 businesses within the company, 2 very advanced economic projects. And we're basically, or we were paying less than 5 cents on the already spent dollar on these projects. So we did not want to continue to finance these previous management teams who were very dilutive. Everyone understands you get these punitive, full warrant, 30, 40, 50% dilutions every time they go into a financing. So we said, we're going to buy the project. We'll manage it like owner-operators. So me and my partners, we all own tens of millions of shares. We self-finance the strategy. And Copper Bank has a royalty company with 2 royalties and 2 advanced projects, one in Nevada, one in Arizona. And we have this other business, which is going to become a holding company of other copper shares. And why we love it is the torque per share. Every 25 cents the copper price moves higher above $3, we gain $300 million of net present value. So assuming I never issued a share again, which we do have to do, our dilution's 2 to 3% a year to manage the portfolio, but we gain $1 a share of net present value for every 25 cents the copper price goes higher. We love the torque on this strategy. So it's trading at 6 cents. You can see the price graphic here on the next chart. And we just recently closed another financing. We did it at 6 cents with no warrant. Financing before this was 6 cents. So people have the opportunity, like a rights offering, to participate in Copper Bank because of the market and the negative sort of sentiment we have right now. You can buy in, and I'm sure everyone there can have an opportunity at 5 cents a share. So it's a $15 million market cap. And of course, me and my partners own a boatload of this thing. This is how we're speculating. So it's like a school bus, and our projects act like little race car drivers, but we don't let them out until the copper price is going to be more normalized. So I also want to talk about a bonus on
that's right, Gianni. I wanted to ask you about this because I've seen you speak a number of times, and I know that you love copper, but you have a great story about helium, right?
Well, I love to be ahead of the curve. I was ahead of the curve on electric cars, on lithium, on some of these other commodities. And helium is a technology commodity. And if you look at the price action going back 20 years, the price of helium, it's an opaque market. It's basically set, or traditionally has been set by the BLM, which has the strategic helium reserves out of Amarillo, Texas. And going back, you can see in this chart all the way to 97. Sorry I had to use such a funny metric here. But it used to be $45 an MCF. It's climbed on the last auction of the BLM out of Amarillo, Texas. The last one was 2018. The auction was $279 an MCF. But you can't buy helium at this price. If you're buying it in a smaller contract, people are paying now between $850 and $1,000 an MCF for helium. It is growing at 6 or 7% CAGR growth rate, and it's just so geologically rare. It doesn't take place in many jurisdictions around the world. And the highest grade, most prolific production has come out of the United States, Texas, Kansas, Oklahoma, Arizona, New Mexico. And you can see here that the 2 big areas where helium comes from is the United States production and the strategic reserves of the Bureau of Land Management. There was no auction in 2019. So effectively that goes to zero. There is a shortage. And few people were looking for these projects. We're doing the exploration, but now that the price of helium has went sky high because of its application in technology. And if you look at where it's used, I think I have a graphic here. It's predominantly in MRIs, lab equipment, and increasingly so as a supercoolant in servers that operates Facebook, Google, all these guys. and they will pay. They are paying. Who's getting priced out? Obviously, it's the party balloons. They can't afford to do this anymore. But it is a commodity. If you're successful, if you have an exploration well that comes in, there is I think there's a huge opportunity here, and I'm speculating that a few things are going to happen this year. I believe there's going to be a lot of these global newsletter groups that are going to start educating the market on helium. You're going to see this coming. So I believe that's going to be, hopefully it doesn't cause like a cobalt or cannabis type mania, but I'm already in. I will capture this upside if it comes. But you also want to look at success. And if you look at the map of where the biggest and most prolific production in the United States occurs, it's in this area north of Texas in through Oklahoma and the Four Corners, where the border of New Mexico and Arizona had the highest grade helium production in history, 8 to 10%. And so I'm speculating with a company called Desert Mountain Energy. And rather than plug them, I think people need to go to their website and get educated. They've got a fantastic area. If you look at the graphic on the next slide where they can go to, under investors in energy, these guys just closed their financing, 22 cents a share. They're going to be drilling 2 projects, 5 wells, 2 in Oklahoma, 3 in Arizona, and they've got 65,000 acres in this prolific Holbrook Basin, which is that highest grade helium production area in history. And these drill programs are going to start up in the next few weeks. So just to summarize, these are 2 opportunities. I think I got 2 graphics on the 2 companies where for copper, I like Copperbank. I own over 20 million shares of the company, so I'm very conflicted. And you could look at the chart and how it's behaved. And then Desert Mountain, which at 25 cents would be about a $10 million market cap. And you could just see they closed their financing, I think today or yesterday. So follow it. It's a speculation, but it's a very interesting opportunity.
Gianni, that sounds like it's bad news for frat boys everywhere that want to make their voice high using helium. Now, listen, before we leave you, we got to talk Tesla.
Yeah, sure.
I understand you're a little bit of a bull, and Patrick is a huge bear, and I'm probably just like his little side cub. But anyways, why don't you walk us through what all the bears are missing and why Tesla deserves this valuation? And in fact, I'm assuming you're probably going to give me something like the ARC lady that believes it's worth $4,000. Why don't you walk me through your bull kind of hypothesis?
Well, you have to be less bullish now that it had a big move. Now, why was I bullish when it was being leaned on by shorts all over the world when it was in the sort of $200, $300 range? Because people don't understand what this business is. When they come up with the argument that they only sell 300,000 cars, it's not a car company. It's an energy disruption company. If you really understand what they've disrupted and how they empower citizens to not require the incumbent energy system, if you really buy into this, you use solar power to make the solar panels. You have you have these cars where people don't have to go to companies like Shell or Chevron ever again, like my cousin in Switzerland, who does not have a Tesla and does not have a Tesla solar roof. He has a European car, electric, and he has a Swiss system. His entire roof is a solar panel when he renovated his house. And when you look at that metric at the time, because you were betting against so many uber wealthy guys, the Larry Ellison of the world, the Jeff Bezos of the world, and all the people that Elon knows who are long the stock, including Ron Barron, who can really articulate why they were going to be wrong. For me, it was going to be a short squeeze of massive proportion. That's exactly what just occurred. It did occur because these shorts were selling to deep pockets that were going to ride. They were going to ride it long. Is it overvalued now? Yeah, perhaps it is. But there's other metrics. So if you understand that any business, like we gave the example of Shell, a business is worth its forward earning potential over the period of 10 or 20 or 30 years plus its asset base. The forward earning potential of Tesla, and they will be able to take over companies. You'll see this. This is the next feather in their cap. They're not going to argue with people. They're just going to take them over with their high share price. They're gone, some of these incumbent sleepers. And all these guys, the 6 or 7 largest car companies in the world, do you know that they spend $5 to $7 billion a year advertising? So in 5 years, they're going to spend $25, $30, $35 billion of shareholder money advertising to millennials who don't buy their products anymore. Tesla has not spent $1 ever advertising. What's that worth to the market cap?
He doesn't need to advertise because he's such a master at working the Twitter and doing
he
this
takes
stuff.
A little red ball, he throws it in the corner, and the whole of global media writes a story about him. He doesn't need to.
Listen, it's genius. Like I have to give him credit for that. It's like Donald Trump. He goes and he says outrageous things, and then people cover it, and he ends up getting free advertising. It's genius. When you say he's going to take over companies, what do you mean? Like, are you talking about like Ford, GM, or are you talking about other technology companies that are developing things that are kind of next generation?
Well, the hand under the skirt of the Mona Lisa here is the way he disrupts incumbent energy. The cars it's a total red herring. There's 90 million cars that are manufactured every year in the world. The world's largest car market is China. There are 27, 28 million units a year. It's not the United States. It's not Europe. That's the future growth market. And his expansion of the Shanghai Gigafactory was the first time, because of the tariff, they're allowing a company to own 100% of the business, which is what Tesla did. He shocked the world where in 11 months, they were able to build a factory and they're producing cars. Now, it's starting at 1,000 a week. It's going to go up to 5,000 Model 3s per week. He's also using a new battery it's an old technology that's been enhanced, an LFP that doesn't have cobalt inside of it, which I also told people I'm relying on the technologists and the chemists of the world to change the way these batteries are made. The common bond will be copper. Copper wins any way you slice the pie. So the next wave, the next thing that they're going to do is as they get a new partner perhaps in the incumbent energy system that buys into this because they've realized they need to be a self-disruptor, they collectively can go and basically make history. And that's already what's taken place. It's not just a car company. It's about the entire energy system, where when you put the trifecta together, to power yourself, to store energy yourself, and to have mobilization, which is either automated and or electrified. And they've got the biggest data set in the world on all of these different technologies. So what's that worth? There is some future earning potential, albeit it's a little ahead of itself now. What we saw now was a short squeeze.
Right. Well, Gianni, that's some great stuff. For people who want to learn more about you and what you're writing about, where can they contact you or look you up?
My personal website is there, but they should get on my distribution list. If they go to you can email me at gk@copperbankcorp.com, and I can put them on my propaganda list, which a lot of things that are interesting with respect to energy and of course copper's role in it. I send it out to my list. I got about 1,000 people that follow me there, and of course on Twitter, I got about 2,500 followers on Twitter, and they can look at you got it here. Gianni Kov is my Twitter handle. And also, people should take a look at my book. If you really want to have a 5-hour dinner with me, there's a reason 26,000 copies have been printed. So it's in hardcover, softcover. It's on audible.com. It's an ebook. It's in German. And people, I think they'd really enjoy it if they like some of the things we just talked about today.
Gianni, that sounds great. Why didn't you put me on the list? I'd love to be on your propaganda list. It's Kevin@themacrotourist.com. Why don't you just repeat to people exactly who they should email and how they contact you again?
Well, I handle all these things myself. It's you can go to the Copper Bank website, and there's the regular info email, or they can email me directly, gk@copperbankcorp.com. And they can follow me on Twitter. My handle's there. You can see it. And of course, people can take a look at my book. It's on hardcover, softcover. It's on audible.com. It's an ebook. It's in German. And if you want to have a 5-hour sort of dinner with me and talk about, it really elaborates on all these themes we just talked about today. Even though the book's 3 years old, it's not stale dated. All those things are actually becoming very, very current right now in real time as we go into this, what I believe is the hinge of history in global energy.
Okay. For those, there's some people that actually are listening to this and not watching it on YouTube. So I'm going to repeat your Twitter. It's at Gianni Kov. So GIANNIKOV.
Right. There it is.
Well,
you'll have to rename the book that your electrician is driving a Tesla, not a Porsche.
That's right.
But there is an enlightenment. My book has nothing to do with Porsche. It's all about electricity. And of course, the doctor, middle-aged guy, gets enlightened. He has a Tesla experience at the end of the book. So we just didn't want to have a book about Tesla.
But then he switched to the Porsche Taycan.
Well, we got to see. The sequel is where the doctor and Bill Gates go on a journey of enlightenment across the United States to show people that the future is now, not tomorrow, happening in real time, guys.
You make it sound like they're doing shrooms in a camper van. Anyways, it was a pleasure having you on. Thank you very much for joining us today.
Thank you, guys. Have a good weekend.
Take care. Cheers, bud.
The sponsor of this week's Market Huddle is Koifin. Koifin is a new platform that gives you professional-grade data and tools to analyze stocks and understand macro trends. It's a personal Bloomberg terminal for those who don't have $25,000 a year to spend on a Bloomberg. The best part, it's completely free. Go to koifin.com today. That's KOYFIN.com.
Okay. Kaylina, hop on. For those who don't know, Pat, we had to do this twice. Patrick screwed up. So let's try it.
I didn't screw up.
Yeah, you did. Let's just keep going. Lena, who's our beer sponsor this week?
So beer sponsor this week is Big Spruce Brewing Company's Serial Killer Oatmeal Stout.
Oatmeal stout. I don't know. This sounds like a breakfast beer.
It does sound like breakfast.
It is a dark beer.
Yeah. So this is actually brought to me from my daughter, who goes to university on the East Coast, and she was kind enough. She knows how important this is to my financial life that I have different sponsors of beer, and she brought us this. Why don't you describe it for us, Lena, while we're opening it up and having a sip?
Sure. Serial Killer Oatmeal Stout is rich and moderately dry with dark chocolate and fresh roasted coffee flavors. Surprisingly easy to drink, this stout will convert even the most fearful of dark beer drinkers.
You know what? It's not bad.
So Patrick might convert from the sour beers to a stout, maybe.
Oh, gosh. Luckily, she brought us a 4-pack of this company. We can try 3 other ones.
Oh, this is good.
Oh, God.
Yummy.
What do you think, Lena?
Definitely interesting.
Okay, Lena's in my camp.
I'm gonna leave the rating for the end of the show.
I'll drink your beer if you don't want it, buddy.
Okay. Let me do my legal stuff. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include fiery bottom catching hysteria, yen migraine grumpiness, and gold puking spasms.
Wow. Or Vic's shorting spasms.
Yeah, I have all 4 of those.
All right. Let's get Kuppy on here. All right. Joining us now is Kuppy for his monthly installment of Kuppy's Corner. Kuppy, how you doing, buddy?
Holy fuck, bro.
Holy fuck. This is a little bit of history in the making. It's just stunning to see how crazy this and how fast this all happened. We wiped out 500 S&P points in 5 days. It's
dude, we traded 150 SPOO points the last hour. Let's just put this all in perspective.
Yeah, it's unbelievable. It's unbelievable. Like, and the selling is now broad, even to the point that in the last 24, 48 hours, even gold miners and everything, there's nothing safe other than treasury bonds at this moment.
Is there ever anything safe?
Well, cash and treasury bonds seem to be doing fine right now.
Yeah, well, let's talk about the gold. Let's talk about gold real fast because I think it's interesting. For the past whatever amount of my life, every time you have a big move like this, gold always goes up. And everyone I know keeps telling me, Kuppy, you got to own gold. Kuppy, you got to own gold. And yeah, I own some physical gold. I mean, everyone should own some physical gold. But I mean, it felt crowded to me. It felt like everyone was buying it. I mean, it felt like, it just felt crowded. And here we are. When gold's supposed to be protecting you, it's just another black eye in your portfolio. Yeah. And I think people forget that in a liquidation scenario, all correlations go to 1, and you don't really know who your shareholder base is. You have some guy that's probably long Ponzi, long gold, and thought he's hedged, and his whole book just blew up, and there's gold down 100. It's nuts. It's a whole factor unwind. I mean, look, oil stocks are up today, and oil's down 3. It was down 4 a little bit ago, and oil stocks have just been bid all day. I mean, why is coal stocks up 20% from the lows yesterday? Why is cruises up 10% today? You just look around the board and you just have this giant factor unwind going on. Some guy was long, Virgin Galactic and short XOP, and he's just been like, oh shit, and unwinding it all.
No, it's stunning to me. It's stunning to me what's happening. Now, in all of this, though, there's got to be opportunity. Right?
Oh, yeah. I live for days like today. I mean, there's companies that have just been hitting it out of the park. They've just been making their numbers, and the stocks have been slowly grinding higher. And I'm like, man, I missed that. I hate myself. I've been following this for 3 years, and I thought I had 2 more quarters, and I missed it. And then, you know, you get some guy with a liquidation that's down 30%. And I mean, there's one stock I'm still buying, but I mean, I've been like a third of the volume the last 2 days. Like, I'm going to just take home every share I can. And I love days like today. I mean, I just live for this.
Oh, I agree. This is if you have the liquidity, if you have the cash on the sidelines, and I know you raised some cash like last month, so now it's time to take advantage of the fact that there's a fire sale this way on so many of these things.
Yeah, I mean, I always tell people you got to play this game with some excess liquidity. I mean, you got to have some room on your balance sheet so that when you have a day like today, whether that means you have some cash or it means you take your book from like 105 to 120 or something gross, you need to have a bit of room because, days like today, you might have 15 stocks that you want to buy and 2 or 3 of them are just down 30. And you're not going to get all 15 you want, but you're going to get at least 1 or 2 of them. So you need to have your shopping list. You need to be disciplined. You need to know what you want to own on a day like today. And you got to be willing to buy them on a scale so that if they drop another 20% by the close, you're just going to own more.
So I want to give you a shout out for a great article you wrote on February 24th. It just so happened to be on Monday, right as the shit show was about to happen. It was Sunday night.
Dude, SPOOs were down 15 handles when I wrote that. And I'm thinking to myself, well, people are starting to die. And, I was joking with some friends of mine because I've been following this coronavirus thing for the better part of a month. And I've been kind of here. I mean, we talked about this last month. That's how long ago it was. I mean, we talked about this, and, you guys kind of laughed at me when I told you I sent my wife out to go get cans of tuna fish.
Yeah, and you know what was the big comment from everyone online is that they feel for you because they're concerned that you're going to get mercury poisoning from all that tuna.
Don't worry, we got some canned beans too.
All right, perfect. Just as long as you're mixing it up a little bit, then everyone's going to be know that you're going to be all right.
But everyone thought I was crazy, and I'm watching this thing, and I have a friend, and we were talking, and he said something really smart, and it's probably a little off color, but this is the right venue for that. He said, no one cares what happens to Chinese guys. There's over 1 billion of them. If a few million die, no one cares. As soon as the first white guy dies, all hell's going to break loose. And I just thought, like, man, that's off color. I mean, I care about Chinese because I have a lot of Chinese friends. And then he was dead right. No one cared. No one cared. No one cared. Oh, shit, Italy has it. And then all hell broke loose. And when I saw the SPOOs actually down, I just thought to myself, I got to write this thing because people are just sitting there unconcerned. And here we are 500 points lower. I was scared. But you don't want to be that guy who, calls one of the next 15 crashes. Or, sorry, 15 of the next 1 crashes. So, anyway, I've been raising capital for almost 2 weeks. I was just cashed up and I'll put it to work today. Today's the day.
So now going back to last week, you wrote a piece talking about private equity having its WeWork moment. And first of all, it's now over a week old of an article, but has anything changed on that front? Like what's your take on all of this private equity?
Well, it's definitely not gotten better after this week.
And it's certainly not giving you the liquidity you need. That's for sure.
I mean, when you look at what the Fed money did, and it's really funny where they printed trillions of dollars in the last decade. Yeah. It's funny where it went to. It went to these funny Ponzi schemes, whether it was like shale, whether it was the tech Ponzi sector, whether it was PE. It was all these things where you could kind of just like make believe. And when you look at VC and PE. It's kind of one of these where like, hey, buddy, I'll mark up your book. Why don't you buy like $5 million off me and I'll mark up your book. And we'll have this like little slush account offshore and, everyone's going to be happy about it. And, when you look at, what happened with shale, everyone's just like, oh, yeah, we're doing 100 IRRs. Just kind of ignore the number. It's working. And I mean, these shale stocks went up and I've had friends for a decade being like, Kuppy, this math just doesn't work. And I'm like, shh, it doesn't matter. And, we saw it first in shale. That kind of blew its brains out. And then, we saw it in the VC sector. And now we're seeing it in PE. What really got me thinking about this, I sat down with a very good friend of mine. I probably shouldn't say which firm he's at, but it's one of the 5 big PEs. And, they run, billions and billions, tens of billions. And he's super senior. And he's like, Kuppy, it's kind of going bad. Like, when not just our book, but all my friends' book, because when you think of what got PE'd middle of last decade, like 2014, 15, 16, it was restaurants, it was retailers, it was what we'd call today old economy.
Right.
But I mean, when you look at the stuff that got PE'd, and that's great when you put like 12 turns of debt on it, no one cares because you have a lot of cash flow. But what happens when you start comping -3 every year? And that's what a lot of retailers and restaurants are doing. And suddenly you start having a really big problem. And the thing is that everyone's focused on raising capital for Fund 14, so you can buy the assets out of Fund 13, and no one wants to take a down mark because it destroys the whole thing. And so everyone was kind of just sitting there bluffing their way through because CalPERS doesn't know how to analyze this stuff anyway. And then suddenly you have some of these energy deals where these things are marked at $1 billion and then they declare bankruptcy. It's kind of like, wow, like, is that still worth $1 billion on your books? It's bankrupt, bro. And you have this kind of like mental problem. So I think it's blowing up, and it's going to keep blowing up because if you have an insolvent business or you have a business with a problem, like as my friend was telling me, you put this thing on. Let's just put some math. You bought it for $3 billion and you put $2.5 billion of debt on it. Okay,
right.
So you now have $500 million of equity, and if you can delever or you can grow the business, you make a ton of money because really what you are is levered SPOO. But if you got you paid $3 billion and you got $2 billion of debt, and now it's only worth $1.5 billion. I mean, you still got $1.5 billion of EV. The problem is that you got $2 billion of debt on $1.5 billion of EV. You might be able to dig your way out of it if you can pay down the debt, but you got to start digging fast because
right.
At some point you need to have a liquidity moment because these funds only last 10 years or 7 or whatever. And so when the music stops and you go, hey guys, we're actually worth -500, but we marked it at like $2 billion because we told you that it's really worth 14 times or whatever, and we paid 7 or 8. Like that's what's happening to everyone, where they keep walking the marks up, but in reality, the EV is going down, the debt's staying kind of constant, and the real EV is probably lower. And I think you're going to have a lot of embarrassed people that, I don't know, it's very Madoff's, in terms of how the structure works. And I think you're going to see a lot of these sort of Ponzi structures collapse. But, at the end of every great bull market, Ponzi structures always collapse. Sorry, it's my rant.
Yeah, it's a cleansing thing. Like it needs to be cleansed out of the system. All the excesses, all the Ponzi stuff, and this a bear market is meant to kind of purge all of that out of it, and then you're left with a market that can, reestablish itself and begin a new cycle. But with that conversation, I wanted to ask you: do you have an opinion on high yield credit in this circumstance? Because listen, you had us trading last week. Like on high yield credit in terms of the spread over Treasury was near its multi-year lows, like 300 basis points above Treasury. And the credit markets were basically not pricing in any default risk, none of this stuff going in. Suddenly we're getting a spike this week, obviously. But is this another shit show waiting to happen?
Yeah, of course it is. Look how spreads blew out, 50, 75 bips? I haven't checked today. But then you look at it on like a historic chart and we're at all-time tights.
Yes.
No, this is going to keep blowing out. A lot of these companies are insolvent. And remember, a lot of high yield, which, I think the basket's kind of funny because it's made up of a lot of telecom, it's made up of a lot of energy. Good portions of high yield are effectively insolvent, but because they're part of a basket that trades together in unison, you've had a lot of these stocks that really should be trading at 30 that are trading at 80.
Right.
Just because it's part of the ETF or it's part of the basket, and there's no humans doing fundamental work on them anymore. It's kind of how like Toys R Us went from trading at 98 to 10 in 4 trading days. No one knew Toys R Us was in trouble. Like there's been headlines about this for like 3 years that the business was collapsing. It just sat there at 98 because it was all owned by the same ETF. Right.
That's
price
crazy.
Discovery is kind of a bitch when it happens, right?
Oh yeah, that's for sure. So let's not forget to touch on shipping, buddy. Like My goodness. Listen, it was a great story, but obviously the global landscape is dynamically changing. And obviously, at least my interpretation is it's not hard to pick on shippers when global trade is grinding to a halt. But what's your take on all of this? Is this some more risk in this, or is this now just gone stupid?
I would say you ought to go sell your kids into slavery and sell a kidney and just buy every share you can. Look, I've been joking with my friends. I intend to go down with the ship, which, was kind of funny 2 weeks ago. Now I really feel like I'm sinking. No, I've been buying on a scale pretty much every day the whole way down. Look, I totally round tripped like Scorpio. It was 17. It went to 41. I felt brilliant. Now it's 19. TK
like
Tankers, I took it from $10 to 25 to 16 today. In the end, the big thesis, and everything in tankers is the big thesis. One of the things I find with shipping, because a lot of people are emailing me and a lot of people are calling me, hey, Kuppy, what do you do? What do you do? And people are freaking out because they actually don't know what the hell they're talking about. And people who own this are kind of like shipping tourists. They don't really know what they own. They don't know why they own it. And they were looking at charter rates in December and saying, ooh, goody, we're going to make a lot of money. And they're looking at charter rates last week of February, and they're kind of in panic because, the rates are down by half. Or, if you're looking at VLC, it's down by like 2/3. But then when you stop and think, you say, well, wait a second, an Aframax at 35,000 today or a Suezmax at 35, these are pretty much 10-year highs for the month of February.
Yeah.
This is a seasonal industry. And if you're year over year comping plus 10,000, if you told me in December that, we'd be comping plus 10,000 over the trough levels, which is, February and March, I would tell you, man, my tankers are going to keep going because, they're just coining money. And instead they're getting sold by a bunch of guys who are panicked that rates are down. Very, very big picture. And you have to go back to big picture because coronavirus will be around for another month or two and we'll all forget about it, unless you die, in which case you probably don't care anymore.
Well, Kuppy, I'm blaming you actually on this because when you came onto the show, it was a hit when you brought the shipping stocks out, and I think you're the one who created all the shipping tourists. And so it's the Kuppy effect, and so now this is why they're all calling you. It's like they just need to know whether you're still in. But listen, I'm with you. It's such an interesting story. When it was at $40, I sold naked puts at 22, saying, "Fuck, this is free money. If the stock goes down to 22, I'll call it in. I'll get it signed on it, and I'm going to take in the shares." But it's amazing how you suddenly regret it when it's down at fucking 19.
No, you'll be happy in 2 more weeks. Look,
probably.
So I had a what's called a healthcare fund. These guys do pharma and they own hospitals and stuff.
Yeah.
And they were calling me up and asking about shipping, and this is a couple $2 billion fund. And that should have been my signal that's getting crowded. But look, very, very big picture, and then we can talk about some other topic. All the world's demand for energy is coming from India, China, Southeast Asia. All the world's incremental supply of energy is coming from U.S. Gulf of Mexico, Brazil. It's coming from Guyana, West Africa. And if you look at a map, that's a lot further to go than it is from the Arabian Gulf, who keeps cutting supply. And net, this is demanding more vessels. At the same time, the order book is some of the lowest it's ever been. And there's a huge tranche of vessels that were produced in the early 2000s that are hitting year 20, and they're going to get retired. And, very big picture, I think this is going to work in our favor, and I don't think you can ever look at what happened this week or next week in charter rates. And you need to really look at the big picture and then say, effectively, am I getting a bargain? And, look, TK Tankers reported earnings yesterday. The stock was at $12, and they guided for more than $12 in cash flow for the year. You don't have to be very smart. You just got to be I got to buy more. I bought so much at 12. I let some go because it's at 16 and a quarter right now. But I bought so much at 12. I couldn't believe that they had a conference call and management's we're guiding for mid-teens cash flow. And, they'll effectively have zero net debt by the end of the year because of so much cash flow. And, everyone's like, man, this sounds terrible. I'm like, what? Like, I can see TK tankers at $40 by Christmas. Right. It's just, I think these things are so beat to death because you're buying a fleet that's delevered at less than half a NAV in most cases. And the right price is probably a premium to NAV. Anyway, let's not talk tankers. Anything I say, I've been proven wrong on. But I do think that we all forget about coronavirus in a month. And suddenly China remembers that they've drawn down inventory of oil and they panic, start ordering. And we're at new highs by summer in terms of charter rates year over year. Actually, we're at new highs. Last thing, everyone calls me up, Kuppy, what's going on? What's going on? And I go, dude, we're at 10-year highs. And they're like, what do you mean? Well, if you look at anything but a VLC, we're at 10-year highs in terms of year over year. For the last week of February, in terms of charter rates. These things should be making all-time highs. They shouldn't be panicking. And I think we just keep making new highs. Ignore the share price.
You know what? Words of wisdom right from Kuppy himself. I love it. Anyway, listen, I'm not gonna hold you any longer because you got to go back to watching this crazy market. It's Friday afternoon when we're recording this, but let's leave it with you making a call on the market. So you're saying, how long does it take for everyone to forget about coronavirus and then the market calm down and then we see a retrace? You think we're a low's coming in any day now here?
I have no idea. I think this virus thing gets worse.
Yeah.
I don't know what the market does. I think the virus thing gets worse. I know, and Kevin and I have been talking about this a lot. In the end, the government only has one tool at their disposal, which is print money and QE and lower rates. That's the fast one because the Fed can do it unanimously. Whereas, if you want to do a fiscal stimulus program, that's political, that takes 5 years. And so I think they're just going to stimulate the hell out of it. And the market probably goes up. And, I've been shifting a lot more of my attention to the sort of things that go up when they print money like madmen.
There you go. Yeah, right from Kuppy. All right, listen, thank you so much for taking the time out to join us, and we'll catch you next month for the next Kuppy's Corner. Thanks, buddy.
Hey, sounds great. Talk soon.
All right, cheers.
Okay, now it's my favorite time. It's Talking Charts with Patrick. I get to sit back and just watch him do his magic.
I'm going to make you talk, buddy, because there's some crazy charts that are going on this week. This is pretty crazy what just happened, isn't it? We got to start with the S&P.
This is unbelievable. It's really truly once in a lifetime because it has never happened before, Patrick. This is the
5 consecutive days.
Well, this is the fastest decline from all-time highs that we've ever experienced. Meaning that we've gone down the quickest from all-time highs than we've ever experienced. And I think everyone's saying that the previous high one was 28. Which is doom.
Wow.
It's not very good. Yeah. Anyways, by the way, we're doing all this on our good buddy Koyfin.
Yes. We're using Koyfin charts. So let's just quickly pull that up, which is the best free man's Bloomberg out there.
It really is. He is a sponsor, I'll be honest, but he's a great sponsor because
perfect fit for the show.
It really is because it's a great product. I use it all the time. Actually, I wrote a blog somewhere and I was at home and I didn't feel like logging in with my Bloomberg and I looked at this thing and I decided to use all the charts from Koyfin stuff because it was easier to export. He's got a function to export it. I was like, this is great. It comes in white. Anyways, listen, it was just awesome. But let's do your magic. You practice your dark art of technical analysis for us.
What's amazing is that I don't know. There was this guy on Twitter that was talking about blood on the streets with a little image. I don't know who that was, Kevin. But it's interesting is that to me, blood on the streets. Definitely, there's a lot of pain. But to me, blood on the streets is when we pull up a chart of an energy company. But when we look at the S&P, what is crazy though is it did wipe out 6 months of advance in the market in 5 days.
Yeah, it's crazy. By the way, the quote is, buy when there's blood in the streets, even if the blood is your own. By Baron Rothschild. I thought that was terrific. I actually, my buddy Dave Lutz sends me that in the morning, and I thought that was great. I had to retweet it.
Yeah,
I'd never heard that actually. Have you heard that expression?
No, but we could talk Rothschild and history in a little bit.
Anyways, okay, let's keep going.
We're going to get back
I shouldn't have interrupted you.
No. That's a great quote. But the point is that this crash is epic. And know what's amazing is that each time you would think that there's like a buy on dip opportunity, that this is where they're going to turn it. But the selling is intense, and the rallies are so short-lived, and they're faded almost immediately. Somebody is unloading indiscriminately here in this market.
So, Patrick, I will agree with you, and I don't know if you noticed, but the other night I got up, and do you remember when we used to get up in the middle of the night and the thing would chug higher all night long?
Yeah.
Like the S&P would just go higher and higher and higher, and you wake up and it's 20 points higher.
Yeah.
I guess it was the night after Trump's speech when he was trying to reassure the markets that everything was okay about the virus. And then I thought to myself, well, it wasn't a bad speech. I thought he did fine. Here we go. We can rally. And then I watched the selling, and it was shocking to me because it was basically the program in reverse. And what I mean by that is if you looked at it, it was someone selling size. And I think the algo works something like this. They'll sell it down like 2 points. So they'll sell everything down. They don't immediately go down 2 points, but they'll sell it and they'll let it around. And then every 5 minutes they keep moving it lower. So if you go look at the night, it was super orderly. It just kind of
intraday escalator.
Yeah, and it just chugged lower. And to me, it felt like a big, huge institution just doing the opposite of what they used to do. And that's what's going on.
Do you think it's index ETF selling?
No, because it's in the middle of the night. Yeah. It's like the Bank of Japan. It's somebody like that. Not the Bank of Japan, the Japan Postal Service, or it's Dalio and the Bridgewater or somebody using it. But they ultimately decided that they were going to go and they were going to sell a whack of futures overnight, and they were going to use the liquidity overnight, and they put it in this algo. And I'm convinced of it because I watched it trade all night. It was super orderly, and it just chug lower.
Yeah.
And so I agree with your assessment that there is someone really, really big. Now, obviously, there's more players than just one. But on the whole, there's some institutions that are selling and they're causing it to go down. Yeah. And people think I'm crazy when I start talking.
Like me.
No, when I start talking about this. But I'll tell you, I sat on an institutional desk, and I used to get orders, and we would keep like the Canadian market like down for 3 days. And I would go on, watch TV, and they would talk about the reasons why the Canadian market wasn't rallying and the U.S. was rallying. And they would come up with all these crazy ideas. And then I was like...
It was just me.
It wasn't me. It was my client. And it was just like, it was this pension plan selling, $1 billion of stocks. And sometimes it's just that simple. It doesn't need to be that much more complicated. A big guy sells, and that's all there is to it.
I know, and they make fun of you if you say, well, why is the market down? And you say, because there were more sellers than buyers. And they're like, you're such an idiot. It's like there has to be a better reason than that. But it's like, no, actually, there were just really more sellers.
Right. And the other thing is that people think because you're institutional that you're so smart and you don't do the same mistake the retailers do. They do the exact bloody thing.
Oh yeah,
they just do it.
They just do it much bigger size.
Tickets. That's all. Like there's no difference. So you think that they're all this sophisticated and not selling holes and stuff, shit like that? Not a chance. They make all the same mistakes.
They just don't do it in odd lots.
That's right.
So, what about this VIX chart? I know, we were talking about this idea of, let's say, going long vol earlier, about this idea of using, let's say, call options on the VIX or something. But this is a legitimate spike in vol, and it's crazy. When you go back and look at 5 years, we are. What's crazy is that when we hit this during Volmageddon, right? So go back to 2018, we traded up to this 50 handle on VIX, but it didn't stay there. It actually reversed, and that was a great level to sell. We closed at vol that high.
Did we? Like you're saying the vol future? Because this is the problem. People chart the
VIX. This is just the VIX index. But the VIX index closed, though, with I'm talking about this candle. This candle closed here at 47.5 on the VIX, right?
No, I'm only laughing, Patrick, because we on our desk we love to listen to Bloomberg. Like they have this squawk.
Yeah.
Like it's not the Bloomberg TV, they have a squawk. And I guess it was Thursday morning when we had that big down open, and the guy said something to the effect that I'm seeing lots of hammers here. And I didn't know what that means. So why don't you explain to what people were saying about the hammer?
Well, the hammer candle is basically an intraday reversal that leaves a shadow on one of these candle charts, and so it like has a head and it has a long wick.
Right.
And
so they open low, and then it's all rallying, right?
Yeah.
And so this guy said, "I'm seeing hammer candles everywhere," right? And then, Jesus, did he Gucci the market? It turned down, and it was not a hammer the way he liked it to be.
No.
Anyways, that's all I'm thinking about. Let's back to the VIX. The reality is that even though the VIX is high, Patrick, the volatility that we're experiencing in the market is actually this VIX level is not out of the realm of possibility. It's not misappropriately priced, is what I mean to say.
Yeah, look, the market is moving.
Right. Like we were laughing because we saw the other day, this morning, it seemed to be in a range. Like it looked like it was in a range, and then I realized that range that I was looking at was $30. It was 30 handles. And it looked like it was barely moving because it was 30 handles. This booze was 30 handles up and down in a range, right?
Yeah.
And think about it, 30 handles. That used to be an entire day would be awesome for 30 handles. This is the little squiggle at the bottom.
It was funny is that back on Monday and Tuesday when we blew through the gamma flip zone on the S&P, I said to my members I said, get used to 30 to 50 S&P point swings in a couple of hours. That's just now the new normal. When you're in the high vol zone, that's just the intraday range of a swing. It's not like 2-3 weeks ago where a 20-point day was just what happens throughout the whole day. We're now in a period where 100-point swings over a day or two is just par for the course.
You remind me of a wise Yoda.
All right.
Okay.
Anyway, but volatility is here. But you know what? In the past, every time we were at this phase in the market, it proved to be a buy opportunity.
You're right. This was it. I saw someone the other day that plotted the three curves. I think he used 2015, 2018, and today. And he plotted the VIX futures curve, and they looked remarkably similar. It was shocking to me how much similar. Interestingly enough, I got to write about this. All the curves were the same except for this curve, which has a kink in it over election period.
Really?
Yeah. It's actually very interesting. Go look at the volatility of the VIX futures curve, and you'll see
the contango in the curve.
Well, there's a spike. It sits
Hold
there.
on. Let's pull this up. Hold on.
Okay. Do you know how to do that?
I think we can pull it up on. Let's see if VIX Central shows it.
Okay. Sorry, Rob. Next time we'll figure out how to do it on Koifin. While Patrick's doing that, VIX Central. Okay, here we go. There we go. So you can see that there's the curve has got a spike in it over the election.
Going into October, yeah.
Isn't that wild?
Yeah, but normally it's in contango.
Yeah, usually it's the opposite. But, I'm saying is that this shape of this curve was where you're
getting no carry right now for.
Yeah, but this is where we stopped last time. The curves looked exactly the same. My point is, I was agreeing with you that we are very close to a bounce in the stock market.
Okay, we're close to a bounce.
I actually would say we're there. I think today was it.
And we'll see if the plunge protection team comes out over the weekend.
Well, no, they already tried to. Did you see Powell came out at 2:30? He basically said, "Oh, we got your back," which was a big change from all the other Fed governors that had basically been poo-pooing the idea that anything would have happened. That's a story for another day.
And Yellen.
Complete. Well, Yellen doesn't matter. She's not in it. Anyways, complete bozos. And I don't know if we're going to talk about this later, but just idiots. They're just such maroons. It's not even funny. But he came out and did that. And then when it looked like it was having some trouble, good old Kudlow and the boys in the White House floated something about a tax cut. They were trying to get this thing to stop today. There is no doubt about it. And I think this was the highest volume day ever for the spiders. Here's a question. I have a question for you, Patrick. You can tell me what this means from a technical basis.
Right.
This was the largest volume ever traded on a stock, I believe, which was the spiders today. Or at least it was on track at 3:00 at that time. Right? I don't know if it made it, but that's what I heard. Given that fact, is that bullish or bearish? And then I'll tell you my interpretation after.
I don't think I think that the high volume is always, it's not bullish or bearish on its own without the context of where the market is.
Okay, well, given this context of this market.
As a indication of a puke, a culmination thing, the high volume is relentless selling indiscriminately. And so it often can be an indication of a turn point in the market.
Bingo. You're a smart man, Charlie Brown. I completely agree. I think that today was the sellers were massive, huge, and the buyers stood in there and stopped it from going down. So some people might look at it and say, look, the buyers couldn't get it up, which sounds terrible. But I think the sellers couldn't get it down. And that's how I look at it.
Right.
And so it's 18-year-old versus 60-year-old.
Well, listen, at this stage, I was telling my big picture trading members that expecting a 200 to 250 S&P point snap up would be par for the course. Now, what is the big $64,000 question? Is this going to be like a bungee cord snapping to the upside where it's just a reaction from an incredibly oversold state, or and it just then begets more selling later in March and April, or is this a buying opportunity where the stock market will somehow manage to come back up and this was just a buy on dip and a resumption of the bull market? Because what happens at that next phase, and I'm not going to even try to pretend like I'm going to forecast which one it will be, but if it's just a snap and we end up a couple months from now selling, that's a bear market top, like a bull market top and potentially the beginning of a bear market. But it's too early, and I'm not making a call on it yet. But a snap of 200 points is par for the course.
Well, that's just wise, man. Like I could see you just like saying do or do not. But there is no try.
There is no try. So listen, I wanted to talk about some of this fixed income stuff because it's crazy. No. Like, listen.
Well, I know this is this is my nemesis. You're bringing up all my bad trades.
No, listen. No. It's not your bad trades. You're just your early trades because I think actually.
Are you going to get bearish on the start?
I rolled up all my hedges on the TLT. I'm not out,
okay.
But the thing is that I've locked it in because I personally think that this is crazy, that overdone on the upside.
Okay, can we not put TLT because no real bond trader uses a TLT?
Oh Jesus! Okay, let me put the 30-year.
Yeah, or the 10. 10
you know what?
Is what
listen,
most people trade.
Let's just look at the yields, let's look at global yields. Let's just look at the 10-year yield on the U.S. And there was, by the way, on TradingView, there was a bad tick of going to the yields to zero. And
yeah, well, that's why you should use that piece of shit software.
That's why that problem didn't happen on Koivin.
That's right.
Fuck.
No, we're never going to get sponsored by TradingView.
Anyway, but
let's have a look
I
here.
think we hit on an intraday basis.
It's record lows.
What?
It was record lows.
Was it 115?
I don't know. It's just absurd. It's crazy, man. Like, think about it.
The
Fed has a 2% target, 2% inflation target, and you guys are buying bonds at 115, locking in a real negative loss if the Fed hits it of 85
You know what? You live in a fantasy land where you believe that financial repression doesn't exist.
No.
You're going to be the next few decades of
next few decades. I've already lived through a decade of it. It feels like.
But bond yields are going to stay below inflation. Just get used to it, buddy.
Oh no, I don't disagree with you there. I actually, you know what? We're in the same camp there. I have no problem with that argument.
Yeah, well then you should go long bonds sometime.
No, and the other thing is I'll caveat that and say the short end will stay below inflation.
Oh, stop it!
Yeah,
right. Listen.
Anyway, it doesn't matter. Let's just
do
your dark magic.
No. But all I'm just saying is that this is all of my measured moves are finishing. I think that the bond move is going to reverse. Like, this is it.
From your lips to God's ears.
I told all my members to take their profits on the IEF. On the 10-year bond, and we roll up hedges on the TLT. It's time to lock it in.
Well, listen, Raul and all the other bond bulls, Alex would say that is why you fail. I'm giving you Yoda.
But you know what? I honestly think that you're going to see I'm going to use the GLD. We're going to see this style of a reversal on Treasury bonds.
Yeah. For those who are listening, it's basically
a big red candle.
What is it?
A big red candle.
Big red candle. Some sort of like Eiffel Tower formation.
So there was a measured move, finished to the upside, and it got hammered to the downside. Treasury bonds will do this shortly.
Patrick, from your lips to God's ears.
You said that already.
No,
My God.
No,
Try something.
I quoted Yoda last time. Okay.
All right. So listen. I think that's happening. What's interesting is that credit spreads are finally blowing out. I talked about it with Kuppy, and what's it called? What's interesting is I still think that we're going to see us move toward a global recession. The stock markets are done selling. That doesn't mean that a path hasn't been determined for a global economy. And I think that credit risk is going to become more, and people are not going to have such a discount on those yields. Let's quickly pull it up here. So like when we put up those corporate credits, this is the right here. Look at the spread. Now we jumped to 462
Do you know
basis
what though?
points.
Like everyone goes, how that's so crazy. Back it up.
Yeah, we have like it's not even a blip.
I know.
Like I mean, when a real recession comes in, this could be 1,000 basis points.
Well, you don't even need a real recession. Look at what happened when the oil companies got into trouble.
Like they're not in trouble
in
now.
2015.
They're not in trouble now.
Well.
Anyway, but the point is that I still think credit risk is being underpriced, and I still think that there's going to be a period where like you keep wanting to be bearish treasuries. I'm much more bearish corps. I think corporate bonds have far more risk than treasury. Make your comment. Go ahead. I'm waiting. I'm going to give you. I'm going to pause.
You know what? Listen,
it's
like the reality is everyone's going to agree with you. So what's the point?
Oh, okay. So you disagree?
Well, the one thing I'll disagree with you is that usually corporates are shorter duration. So you're not really worried about inflation. Okay. So you're basically, yours is a risk asset. Mine's not a risk asset. So it's not really the same. I will tell you this. If you vol adjust them, I might be more on my side. You can't compare the two. It's like saying, like when I picked you off on the home builders versus the TLT.
Yeah, I should have vol adjusted.
Yeah, you completely got hosed on that because the reality.
Such an amateur.
You're a terrible better because you're too eager to bet with us, and you just want it on the tape, like you just want the trade on the tape, and you're doing it. You should vol adjust that because the reality was that the home builders are going to move more than the bonds.
I just know that whatever you think, odds are you're going to be wrong on a certain percentage of them.
I'm just going to fade you. I'm
just going to fade. I'm going to fade your high convictions, and I know that a certain percentage of them will come in with stakes.
Yeah,
like I don't even have to think about it.
Fair enough. Okay. Or if not stakes, Market Huddle menswear outfits.
Which I'm looking forward to that.
I know.
Well, I mean, you still have to take out me and 5 other listeners.
Yeah. Well, I figured we should combine the two.
This is what I was about to say. This is now going to be combined.
Let's do it. I might as well do it and think, well, you know what? We'll dig through our email. We'll find those 5 listeners. We'll get it done, and I'll do it in my Market Huddle 70s menswear.
Oh, it's going to be wonderful.
It's going to be awesome.
It's going to be wonderful. I'm so excited.
It's going to be good.
All right. It's time to move on, Kev.
So, Patrick, I'm going to let you go again. I have to say even less this time. This week in trading history, what do you got for us?
All right. Well, this week in trading history, we're going to go back to 1791, February 25th of 1791, and the creation of the first Bank of the United States. And so back then, Alexander Hamilton's grand experiment in central banking began in the post-Revolutionary War economy. So the War of Independence was over, and the United States of America was beset with problems. So the 1780s saw widespread economic disruption. Continental Congress printed huge amounts of currency, which led to rampant inflation, and that inflation made the currency practically worthless by the war's end. And so Alexander Hamilton, which was the first Secretary of the Treasury under the new Constitution in the United States, had ambitious ideas on how to reestablish commerce, industry, repaying the debt, restoring the value of the currency, lowering inflation. And he felt that this all could be achieved by creating a national bank. So it was in December 1790, Hamilton submitted a report to Congress in which he outlined this proposal. So Hamilton used the charter of the Bank of England as the basis for his plan. First mistake, right? No. So he argued that an American version of this institution could issue paper money and act as the government's fiscal agent, including collecting the government's tax revenues and paying for the government's debts. So on the other hand, the opposition was Thomas Jefferson, who was afraid that a national bank would create a fiscal monopoly that might undermine the state banks. So in the end, Hamilton won. President Washington signed the bill into law, and on February 25th of 1791, the first bank of the United States opened for business in Philadelphia with a 20-year charter. And so the Bank of the United States started with a capitalization of $10 million, but $2 million, which was owned by the government, and the remaining $8 million was to private investors.
That's actually pretty big for 1790.
Yeah, 80% was capitalized by private investors. Many. So there was obviously a large initial public offering, not the first IPO. We had covered the first IPO in the past, but it was the largest at the time, public offering. And many of the initial investors were foreign. The Rothschilds have their tentacles in every little place, right? But the fact was it didn't sit very well with Americans. But even though the foreign shareholders were not allowed to vote.
Oh.
So they were able to profit, but not vote. And so just a little interesting tidbits. To avoid inflation and the appearance of impropriety, the bank was forbidden from buying U.S. government bonds. So no QE back then for the original central bank. How things change. Today, the U.S. Federal Reserve can't buy stocks. Let's see how long that lasts.
Right.
And so also the Bank of the United States back then did not set monetary policy the way we know it today, and it did not regulate or act as a lender of last resort to financial institutions, and it did not hold their reserves. So it didn't function in many of the same ways of the way the modern Federal Reserve does. Nonetheless, its prominence as one of the largest corporations in America allowed it to conduct a rudimentary monetary policy. So the banknotes, backed by a substantial gold reserve, gave the country a relatively stable national currency. So by managing its lending policies and the flow of funds through its accounts, the bank could and did alter the money supply, doing so therefore the credit of the economy, and hence the level of interest rates that were charged on what was borrowed. And so in the course of business, the bank would accommodate the notes of the state banks and hold them in their vault. And so when it wanted to slow the growth of money and credit, it would present the notes to the banks and collect the gold and silver in return, thereby reducing the state bank's reserves and putting on the brakes on their ability to circulate new banknotes. Subsequently, alternatively, to speed up the growth of money and credit, the bank would hold those state banknotes and thereby increase the state bank's reserves, allowing those banks to keep issuing more and more banknotes as new loans. And so it was a rudimentary form of it's the very basic form of banking. Right, and they did it, but it's not the way we know central banks today. So it was in January 1811, which was 20 years later when the charter ended. Both chambers of Congress engaged in a debate to whether to renew its charter. Later that month, the House voted against its renewal by just one vote. By 1811. Many of those who opposed the bank's original charter still opposed it for the same reasons, and they allowed it to expire. And at that point, Alexander Hamilton was dead, killed in a duel with Aaron Burr.
I hate it when that happens.
Yeah, I hate when that happens. There's going to be a duel at Market Huddle at some point for sure. But in the end, the pro-bank Federalist Party was out of power at the time, and the Democratic Republican Party was in control, and the bank died. and it ceased to exist. There's a nice history, obviously, afterwards for the second bank. We'll talk about it in the future, but that was the history of the first central bank attempt in the United States.
That's awesome. That's a great story. You did really well.
Oh, thank you.
I got to go to have a little snooze.
Now, we did have a WTF clip of the week, and then we didn't. So we're going to leave it alone. So we decided to do...
I decided that we can't do both WTF and Tales from the Trading
our
Desk.
Listeners would object.
Maybe not. I don't know.
Anyway,
I'm going to do a Tales from the Trading Desk.
We're doing a Tales.
I wrote it up recently, and I decided I was going to do it. So.
I hope this is about you going short vol too quickly.
No, we're going to save that for the top three. So this is about the Japanese stock market.
Okay.
And I know it's been a long time since anybody's gotten excited about Japan. But there was a time, if we go look back at the 80s, it was the roaring market.
Oh, yeah.
Right? It went from a level of where, let's just have a look here. It was, 6,000, 6,500 in 1983. And by 1990, it was hitting 38,000.
It's almost like those people that were cheering for Dow 40,000, right?
Right. And one of the most amazing parts about the Japanese bubble, because it ended up being a bubble, is that George Soros correctly identified that he thought that this was going to bust. But he put on a long U.S., short Japanese Nikkei spread. Right. And then 1987 happened. And so if you go read a story, and we should save this for another day, but he actually got just, I don't know. Reamed, that's a better word than I was going to go with. In the pit, he sold the lows and made some, floor traders retired off the trade. It literally came out, I think that the S&P was trading 220. He had I don't know, they 50,000 cars or something, those contracts to go. And I think it was Shearson Lehman was doing it for him, and they went 220, at 215, at 210, at whatever. And then they opened it at 187. The whole thing traded, and then next thing you know, it was 220 again. It's just it was just obscene. Anyways, that's a different story. What I want to talk to you about today is the Nikkei stock market and this bubble. So in the 80s, all the credits created. This thing creates the greatest bubble ever. And people come 1990, they want to short this thing. Right. And this isn't the time when you can put on some hedging trades in your interactive brokers. Back then, it was difficult to trade these things. So people went and come up with innovative ways to short it. And one of the big banks at the time was a firm called BT Bank. And BT Bank was the kind of preeminent derivative dealer. And they issued these things called the BT Bank Nikkei put warrants. Well, this is I'm going to tell you the story. And although it was a little before my time, it was actually a fellow at my old shop that told me it because he was there and one of his flunkies was my old boss. Anyways, they were at RBC Dominion Securities, and they decided that this would be a great idea to get themselves into the equity derivative business. They would go and make some put warrants on these things. So it's 1990, and everything's going great, and they decide to sell these put warrants. So sure, they sell a ton of them. It's great. It flies off the shelves. They sit there, and they sell these 5-year put warrants.
Let's just take a pause and explain to people that warrants have the same characteristics as options.
Yeah, that's right. It's basically a listed. It's a warrant that has a certain number. Like options can be created and destroyed whenever
with open interest.
That's right. But a warrant has a certain number that people trade, and so it is in essence a long-term put option that trades on the exchange. Yeah. Okay. So they issue all these things. They sell it at 25 vol. I don't know what the numbers are. I'm just making it up. They sell it at 25 vol. They think they're going to make themselves a fortune because they figure that they could hedge this thing at 18 vol. The broker takes two vol points. They take the other 5. 5, right? And they go, great. So now we have to go and we have to delta hedge this, right? So meaning they sell, they're short all these put warrants because they've in essence guaranteed the payoff profile of the put warrant, and then they got to delta hedges. So they go short some Nikkei futures. And the thing about it is that this thing trades in the middle of the night, right? And it's not, and you have to phone someone and you have to do it. So the first night, my buddy, his name is Doug, he's there and everybody's there and it's great. They're going to go and they short their 4,000 futures or whatever it is, and they think this is terrific, right? This is so much fun. Look at all this money we just made because, often at banks you would go and you would present value the difference in balls and go, yeah, we've just made X $1 million. And really, you don't realize that you have 5 years of hedging at that thing and that the real risk is still on the sheets, right? Anyways, so the first night it's exciting, it's fun, and then the second night comes and they have to go and don't forget, if you're short vol, like you have to delta hedge, so as it goes down you need to sell more, and as it goes up you need to buy more. Some markets are quiet, it won't matter, but when you know it ends up being that the Nikkei starts to roll over. So we have a situation where next thing you know, the stock market starts plunging. So it goes from 38,000, and just so to get a sense of it, it goes from 38,000 to what's that?
15,000.
15,000 in 2
years.
So it more than it almost gets half, right? And along the way, there's ups and downs. And so my buddy Doug and his team are going, and every night they're going and they're trading all night. Because they have to buy it as it goes up and sell it as it goes down, and they're sitting there on their thing, and they
destroys your nightlife.
Exactly, it destroys your nightlife. So they decide a couple of times, well, let's go have. I think Japan's got a break. Like they're very civilized over in Japan. They have a break of an hour and a half. So my buddies decide they're going to go drinking in the hour and a half. Like, oh, it's okay. The market's closed for an hour and a half. Let's go drinking, right? It's 1 a.m. or whatever, 12 in the night, and. The funny part of that story is, so they all go drinking, they get drunk too much, and then they pile in my buddy's Porsche, and Doug he's got this little 911, and there's like 6 of them, and there's like guys like
layered on top of each other.
Layered on top of each other. For those who don't know, it's a 2-seater car with like these 2 seats at the back that you wouldn't put your kids in, and he gets pulled over by the police. And the police are like, "What are you doing?" Right? And they're like all these drunk guys in the back, and they're like, and he's like, "Oh, really? Like we're financial traders. We've been trading all night. This Nikkei pull warrant." And just so you know, Doug is quite a character. Anyways, for those in Canada, his name is Doug Steiner, and he's quite a character. And he talked his way out of it because I think he was drinking too. And anyways, they let him drive home with these 6 guys in his car. Whatever. It was a different era. But the point of this story that I think is the funniest is that after, a year of this, it got really tiresome. It was a pain in the ass, like getting up every night and going and hedging and doing all this stuff. And Doug it was tough. He didn't want to do it. Nobody wanted to do it. He was looking for different solutions. So he came up with an idea. And this next part of the story I'm going to tell you, Doug told me this story, and as he told me it, like this big smile crossed his face, because he said years later he met the BT trader, the guys that issued the other warrants, and RBC Dominion had one set of warrants. The BT guys had like 3 or 4 different ones. Right. And he met the BT trader, and the BT trader, said they introduced each other. He said, "Oh, I did the BT put warrants on the Nikkei," and Doug said, "I did the DS ones," and the guy said, this that stupid product cost me my marriage. He said, I was up all night. I never saw my wife, my family. It was brutal. It was just crushing. We ended up getting divorced because it was the worst 2 years of my life, or 3 years of my life hedging that thing. And Doug just smiled, and he told me, he says, "I didn't have the heart to tell him, but what Doug had figured out was, instead of going and delta hedging it himself, he went and bought all of the Nikkei put warrants by BT Bank because they were trading cheap in the market. So when they got issued, they quickly went down to like a 20 or 18 vol. So instead of delta hedging it himself, he just bought it all from them.
And then let them get stuck fucking doing it all.
That's right.
Oh, my God. So it lets him ruin his marriage, and he gets back to fucking drinking every night.
Yeah. I like that story, though. Doug's a character.
Oh, that's awesome.
Yeah.
Thanks for sharing, buddy.
Okay.
All right.
Top 3 things to watch next week. What do you got?
Let's start with reviewing last week.
Oh, that's right. Wasn't a part of this. I was busy today. So
So obviously last week we had that big conversation about does the intermarket breakdown crack equity markets, and the definitive answer is what? Yes. Holy shit!
And did you nail that?
Wow,
you were right in that those were the kind of divergences that we were looking for, right?
Right. And I mean, I know you were bearish at the start of the week too, but I'm so happy for my big picture trading members.
Well, you nailed it, and I'll just tell you, one of the things that you did much better than me was that you stayed bearish the whole time.
Yeah.
I got like halfway through, I was like, you know me, I'm like want to ring some register and stuff like that. And I phoned you up and I said, I was probably right for what, 4 hours? And, I said, this is it. It's going to bottom here. And you said, nope, these things don't end this way. And I have to give you full credit. I'm not just saying this, like full credit. You stood in there and said, nope, these things don't end that simply. There's no way this is the end. And you stuck in there. And you wrote it the whole way, right?
Yeah.
Were you covering today or yesterday?
It covered some and rolled down the some hedges. It's expensive hedges, by the way.
Yeah, well.
at a 47 vol.
Yeah, no, it's pretty crazy. But anyways, so the answer was yes, it did.
It did. Yep. So number two, how about those semiconductors? That could have also bottomed today as well. But
hey, listen, today they traded well, right? Like they were up on the day when the market was getting shellacked at lunchtime. They were rallying and they showed a green tick.
How about the energy stocks too, right?
No, that's a weird one. That was a month-end kind of weirdness or something.
Yeah, that was. But there was a number of these things, like the market's getting hammered, oil's getting hammered.
I almost wonder, and now that I'm saying this out loud, that this is a month-end crap, the shenanigans that these guys do.
Maybe. But I'll tell you right now, semiconductors, it fell. But what's interesting is that the semiconductors bottom right at the 50% retracement, almost like Fibonacci's work, but I'm not going to go there. Anyway, so the semiconductors did in fact top. They did in fact reverse. And it's interesting to see what will happen, but there's going to be probably a bounce with the whole market here. Anyway, number one, obviously the COVID-19 coronavirus. Is it going to continue spreading globally? That still has to. That was the number one, and it continued to overhang over the market. I mean, the Italy news and stuff just.
The Italy news wasn't as bad as the 8,400 in California.
Yeah, that was.
This is. Are we talking about this in the top three things next?
Yeah, we're gonna have mentions.
Okay, so I'll just be quiet about it, and we'll talk about it.
Exactly.
Okay, let's go.
Number this week to watch, did we just see a swing peak in gold?
Okay, so before you get too bearish on gold, rumors are that there was a big buyer of deep in the money call options about a week ago, and it was so big that some banks had to split it up amongst themselves, and they got all the banks short gamma, and so that caused them to chase. Right. And now on today, it looked ugly, like it shit the bed, like no other way to describe it. But I feel like this is just gamma chasing. I'm not as bearish as probably as most people are.
Yes. Look, I personally, I was originally hoping from a bull stance that it would hold above 1,600. But generally, in trading, you want to see major consolidation zones. Like right in here is the high vol zones. High volume zones.
Yeah,
that are in there. And so generally, if we stay well above 1,500 during the pullback, that it will just be a buy on dip.
Yeah.
I'm in that camp.
I was staying in that camp until proven otherwise.
But right now, if equities do bounce, and it's an if, because I don't want to imply that this is already a given, but it's a very good chance that equities are going to bounce here, then we may see this kind of temporary risk on. So gold and treasury bonds will probably be selling, and equities will be bouncing for a week or two, and then they'll flip again.
I'll give you something. I think gold outperforms treasury bonds by a long shot.
By a long fart. We're going to write that one down for a title there.
That's
okay.
Right. Okay.
So
number two.
Number two, obviously, and this was to your point, that will we see this actually become a problem in North America where things start getting shut down here?
The COVID-19. Okay, this is my new theory on this. You want to hear it?
Yeah, let's see your theory.
Okay. After 9/11, there was a period when the stock market would go down on every single bag that was left in Grand Central Station, or a plane that couldn't get in communication with the tower, and it caused a real kind of panic in the market. As this proceeded, it eventually became less and less of a panic because the market became desensitized to it.
Yeah.
I contend that right now we are seeing the market sell off on every headline. Mm-hmm. Thursday was the 8,400 cases in LA. That's when the selling came. I sat there, I traded, I watched it, and the selling was hard and it was furious. We are going to hit a point, and this is when I think you'll know that this is no longer something that, or the market's bottom. When these sorts of news events about more cases don't cause the big, huge sell-off. Because let's face it, it's here, Patrick. You say, will we see it?
No,
of course we're going to see it.
But you know what? Interesting analog, go to China. This is the China A50. And, there have been cases and things have been going, but it didn't change the fact that it bottomed and the stock market rallied. Yeah. I know it's a little bit different.
No, it's not. So, Patrick, I completely agree. Now, the difference, though, is that China is stimulating monetarily. And anyways,
but that's where number one. Let's just go straight to number one. And rate cuts.
Why don't you read it? Because there's people.
Yeah. Do we get the Fed and the government intervening into these markets to stabilize things? And I mean, the probabilities of a rate cut spiked.
Yeah, we're almost 100% now at a 50, not at a 25 in March. Yeah. After Powell came out and spoke at 2:30, we went to like a 94% chance of a 50 in March.
Right.
Okay. Now, I'm going to get in a lot of trouble here. Everyone pushes back. I wrote that piece. I wrote it when I said something to the effect that
I'll push back.
The Fed are a bunch of clowns. They are a bunch of clowns. They sit around, and if they couldn't figure out that the entire global economy shutting off was going to cause the numbers to be bad, and they say we got to see it in the numbers before we ease. Like you need the numbers. It's like it's like I gotta go check the news to check. It's like I gotta check the news to find out if it's daylight outside.
Tell me if I'm an idiot.
Okay.
But here's my little thing. I think that the Fed realized that they were feeding. With that repo thing, they were feeding an equity market that was going way overextended. Okay. And they basically were going to let a certain amount of air out of there before they bailed it out. Why are you going to bail it out when it's down only 100 points?
I completely disagree that maybe that's what they were thinking. They're dumb if they're thinking that. Because now, after bailing it out, in essence, because the stock market's having a fit, let's face it, that's what's happened. The stock market is having a fit, and credit spreads are widening out.
You're training the market.
You're basically saying that if the market goes down, I'm gonna cut rates. But if there's something that I can actually see in the real economy coming down the pike, I'm not going to do it. Bozos, complete bozos. They should have gotten ahead of it. It was very clear that they needed to go, and at the very least, if they weren't going to cut rates, provide liquidity. The world trade is slowing to a halt. There's no way that there's a USD credit shortage. It is so clear and obvious to me that the Fed needed to be a leader. Let's face it, ECB can't cut rates. Australia cuts rates. What's that going to do? That's like pissing in the wind. There's just nothing going to happen. So the reality is that the Fed needed to be leaders, and they weren't leaders, and now they're even worse.
They've never been.
Exactly, and that's the problem. And listen, I wrote this in my piece. Kevin Warsh talked about it in 2018. He gave an op-ed that was 6 days before they finally puked, and the stock market had to go down those 6 days before Powell finally gave in and became dovish. This time he did it. I think that Powell has now kind of turned the boat. So he's 2 days into it. Kevin Warsh has cemented himself as the next Fed chairman if Trump wins the next election. I 100% believe it, and I will gladly take that guy because he's not going to sit around and wait for the economic numbers to do what everyone knows is correct. Now, you might say to me they shouldn't go and they shouldn't lower rates. Fine. If you're going to get to that, then let's just not lower rates. no matter what the stock market does.
Right.
And my only point is, everyone says, well, you're just going and you're basically getting you're giving the advantage to the finance over people, or they'll give me this argument that the people that lowering rates doesn't help people, navigate this flu. I agree with you that it's not a cure-all to anything, but tell me this: how does creating a financial problem on top of the humanitarian problem help anything?
Yeah.
When the curve at the front end is trading, like when the entire, swap curve is trading 50 basis points below Fed funds, you know that the market is telling you that the Fed is too tight. And that's it. I stand by.
Done.
Oh, wait, and I didn't finish. Do we get a Fed intervention? Yes, we're going to get it this weekend. And I know if we don't, I'm going to look like an idiot. It's going to be coordinated. It's going to be all central banks.
But what happens if we get a market response to the upside and everyone sells into it?
I don't care about that because that's not what I'm actually interested in. I believe it's the right thing to do for the economy, not for the market. Right. And that's what I would like to stress, is that everyone thinks I'm doing this because I think that we got to save the stock market. I don't care about the stock market. You're just
short vols, so you just needed to.
No, I actually, listen, you could be right. It could do nothing for the stock market, but I believe that it's the right thing to do for the world global economy. What do you think?
All right, I'm good with it.
But do you think it's coming?
Oh, yeah, I think so. Oh, why? No, there's going to be because.
Is it Sunday night or is it next week?
No, I think it's going to happen this weekend too. I'm with you.
You probably just.
I'm with you. I'm with you. I don't think that Goochers it. We'll see. Anyway. So, parting words of wisdom, Kev.
Defeat is not the worst of failures. Not to have tried is the true failure. George Edward Woodbury. I think that's I put that one there. I chose it because.
Does that really apply to markets? That's a really good life one.
I guess it is, but I feel like it's also with markets too. Maybe you're right. I was kind of desperate. I was going fast.
I like it, though. I like it. It's George is a smart guy.
Yeah. Well, it's one of those ones. What's it like? The man who doesn't enter in a ring and doesn't fight or something. There's some.
I don't know. Now you're drunk.
No, not really. Okay. let's wrap this up. Okay. Now wait. Are we supposed to say something? Yes, we are. 1 second.
Oh, I don't even know.
Yeah.
Lena, come on here and help us with the script.
Yeah. Actually, Lena, why don't you just help us with the end here?
What do you want us to say?
Yeah, you wanted us to say something at the end, right? Well, actually, Lena, you just do it. Take it away. Yeah, whatever. Whatever. You know what? Patrick's right. We are a few drinks in.
All right. So.
That's right. That's the thing. Lena's always you listen. Honestly, Lena's very particular about the thumbs up on the YouTube channel, but you can do the thumbs up or give us a review on iTunes too. Lena will like it. She'll think it's great. And then for those who don't know, make sure you go and you email us or sign up for our email so that you get our chart package. I know that
so
while I was
Gianni had a great chart book.
So while I was interviewing Gianni, Lena sent me notes that says, make sure you mention the chart package, which I'm now mentioning at the end. Okay. Yeah, better late than never. Anyways, thank you very much for everyone. Have a great weekend. I'm Kevin Muir.
And I'm Patrick Ceresna. Thank you for joining us. So, as well as a special shout-out thank you to Gianni for being our guest this week, and as well for Koifin as a sponsor. Make sure you go on and register for your Koifin account. It's free. Great website to use. Otherwise, Lena, hop on here.
Lena.
We butchered that.
That was terrible. I feel like we should do it again. If I didn't have the rule about no retakes, I would do that again.
It's fine.
Okay, it's fine. Okay, so let's get. We got a lot of things to talk about. Let's start with the beer. Mm-hmm. Big Spruce Brewing. It
drinks like a meal.
It does. I see something here. It says Big Spruce Brewing is Atlantic Canada's first organic on-farm craft brewery and hop yard. Don't know what a hop yard is. We craft unfiltered, unpasteurized. Now, unbelievably good beer. Is unpasteurized allowed? I don't know. Because it's always like when you hear about people drinking unpasteurized milk, they're always getting sick.
You know how have this one beer. I'm trying to remember the brand. It's another one of these oatmeal stout beers, and it's been in my fridge for 2 years because I keep thinking, do I want to drink an oatmeal stout beer? And it's been sitting there, and I haven't drank. It's still in my fridge right now. And now that I've had this one, I know what I'm about to get in some way or another. I think I'm going to drink it tonight.
Well, that's good for you, Patrick. You can take this extra one of the Big Spruce. I'm not a fan. I'm hopeful. Big Spruce gave us 4, so I'm hopeful the other ones are going to be better. I think it has more to do with the fact that it's a serial killer oatmeal stout. I'm giving it a 6-1.
6-1. You're above 5, which means that it's not. It's not fruity.
That's right. What do you think, Patrick?
Well, yeah. No, I'm going to give it a 6-9. You know what? To me, it's not actually really sessionable. I could drink one of these.
You always want to get the sessionable.
Yeah, I don't know why I'm obsessed with that.
You really
but
are.
But the point is that I could drink a can of this. This is fine. But I don't think I'd grab a 6-pack of this.
Okay.
You know what I mean? It's a good beer.
Yeah. You know what? You know that Tragically Hip song?
No.
Well, of course you don't. And it says, there's a lyric in there that says that once she found the word iridescent, everything was iridescent for a while. That's like you. Once you find the word sessionable, everything's sessionable. Now, he was writing that about his 6-year-old, so it's very fitting. Okay, Lena, what do you think?
I have a bit of mixed feelings about this one.
Yeah.
So I'm going to give it a 7.5.
Oh, wow. What was the positive mixed feelings?
I mean, it is a meal.
Oh,
but I don't know. I think I like the lighter beers that are more crisp.
Okay.
This is a little bit heavy for me.
Okay, we'll let you off, Lena. That's good. Now, listen. While we were warming up, we were talking about something, and I figured it's good for the after hours. I found a new podcast. And Lena, it's called, it's from Wondery. First of all, do you know Wondery?
No.
Well, Wondery is the best podcast kind of company around.
All right.
Shit, why are we not on it?
Well, no, but they make their own, and it's professional. They have one, let me just think the one that I really liked at first. Dirty John was my original one that I liked. If you have any interest, go listen to Dirty John. But then they had another one that I thought was even better.
Is Dirty John based on that true story or whatever?
Yeah,
I think I saw a documentary about it.
It's Dirty John's really good. And then they had this other one that's about kind of L.A. in the 70s, and I can't find it. But anyways, let me talk about this one that I found. It is called Dying for Sex. Okay, and it's a woman that's in her 40s. And she gets diagnosed with breast cancer, and she decides that life's too short, and she's going to leave her husband and go out. And it ends up being that it's terminal. It's terminal breast cancer. It's stage 4, and she's going to live life how she's always wanted to live it, and she's going to experiment sexually.
Good for her.
Okay.
And the reason I'm bringing this up is because she's actually quite normal, but she's just kind of willing to go out and see what's there and stuff. Men are fucked up, man. What the hell? The things that guys are into, I'm like, what the hell?
This is a podcast.
Yeah, it's just weird shit that you just can't even begin to you're just no. Why do guys what happens to the
Well, you
wiring
gotta give us
in
an
their brain?
example of what's so
No, you gotta go listen to it. It's just weird shit. The foot. Well, I don't want to offend any of our listeners that might be into this stuff. So
just go listen to it.
Just go listen.
It's not for everybody. I get it.
It's actually tasteful. I disagree, and it's actually very enlightening because this woman is facing this serious situation with a bravery, and I find it. I really enjoyed it, and I really did. But I came out of it thinking, God, guys are just screwed up. What's with us? You know, my old business partner used to tell me, he says, if women ever figure out how to procreate on our own, we're done for. Because, we're such idiots, he says, all the time. He says, that's what he says to us. And I'm after listening to this, I'm yeah, we're just, we're idiots. See, Patrick's quiet.
I'm not.
He's got some. I
wonder what comes up in your Google searches.
After a couple beers, this is where I get myself unnecessarily in trouble. And
That's right.
You're very good at being politically correct. I'm just going to stay lay low here a little.
You are good at that. Although I get shit for it on Twitter, by the way. I get about being so politically correct.
Oh, I know you are. It's really bad,
I feel like I'm not really.
Yes, you are.
I feel like I'm
not even allowed to say the tard word.
Yeah, exactly. You just did.
I didn't.
Yeah, you're damned if you do. You're damned if you don't.
Taking out a syllable does not.
Why not? I didn't say it.
Giving us the slang short form. You're like Matt Dillon in It's Something About Mary. I really like working with them. Do you remember that? You gotta go. Anyone who doesn't know it, go watch Something About Mary. One of the greatest comedies of all time.
Yeah.
We got a bleeder.
Speaking of watching, I started watching Succession because of last week.
Oh, did you enjoy it?
Oh my god, it's so good.
Yeah. Well, listen, I'm surprised you like it because a lot of people have trouble with the first couple ones.
Oh no, I thought this.
How many
are
you into it?
Oh, I finished the first season.
Yeah, the second season blows the doors off the first season.
But I mean, the way first season ended, I was just so shocked.
It's pretty awesome. You know what do you know what I'm amazed about on that show? And you might be at the point where you're still actually liking people, and you're and then you might actually be rooting for people.
No, I'm not.
Everyone is a jerk.
Yeah.
There is no likable character on that show at all. It's like they purposely said, we are going to give you no heroes in this. It is going to be just villain after villain after villain.
Even that guy that
the big tall guy, right?
Yeah, even him. Yeah. I can't.
He becomes
stand
a dick. Yeah. And you're just like, oh god, it's like there's no redeeming character in this. So it's kind of great that way.
In a way, it kind of makes you feel better about yourself.
Maybe that is it. Anyways, I love it. I think it's a great show.
I think Patrick should go watch it.
Well, Patrick doesn't watch any TV. He's still trying to get caught up on Friends.
Some of us have to work for a living.
Yeah, that's right. God, when we first started this thing, the amount of times that you would sit there, I'd be like, this, blah, blah, blah. And I'd be trying to get help you. You just left me hanging. And I'm like, I'm never asking him for a kind of a modern day culture kind of a thing again. Like, Patrick, do you even know what Succession is?
You told me about it last week.
Yeah, exactly. Had you heard about it before then?
No, I had no idea.
Yeah. Do you know what show?
Oh, my God. Stop this.
So what's the last show you watched, Patrick?
MASH?
Actually,
it's going to be like Miami Vice is really cool. Is this still on Friday nights?
Actually, I don't really watch TV, but I watched with my kids. Just for the first time I saw it was Scott Pilgrim versus the World.
Oh my God!
What year did you watch this? Because that came out forever ago.
That was 10 years ago. Scott. But I just watched it with my kids, and it's a fucking epic movie.
Yeah, well, it is good.
10 years too late, but okay.
2010.
Yeah, you're a decade behind. That's
decade
right.
behind, but you know what? I at least
filmed in Toronto. Filmed in Toronto.
Yeah.
Yeah. You Castle Oman. Did you recognize that?
Yeah.
Yeah, it's pretty awesome. He's great. Listen, what's his name again, Lena?
Michael Cera.
Yeah, Michael Cera. He's awesome.
Yeah.
Right? The best.
He's a Brampton boy.
Oh, I didn't know that.
Yeah.
I knew he was Canadian. I didn't know he was from Brampton.
Yeah.
Are you sure?
Yeah. At least that's my kids told me. I don't know. I didn't
they probably know. My favorite Michael Cera scene is in Superbad when he's in that party and they make him sing. They make him sing the Guess Who song.
I can't.
Oh, you know what, Lena? Let's put a little bit of this.
Patrick has no idea what we're talking
about. Yeah, I have no
idea. He doesn't know Superbad. What's that? Is that a comic?
Actually, my kid. That's actually the next movie on my
oh
list.
my God.
Well,
Superbad, you're gonna bust a gut. You're gonna bust a gut. It's awesome.
It's so.
It is great. You honestly haven't seen Superbad?
What? I haven't.
Okay, so can you do us
I know.
a favor?
I know. Listen, I know scenes from it, like the McLovin scenes and all those things like that. So no, I've seen scenes, but I've never actually watched it from start to finish.
Okay, so can you do us a favor? Can you watch it this week?
You have homework.
About it?
All right. I'll watch it with my kids this weekend.
Yeah.
Okay, good. Superbad. It's awesome.
All right.
Okay.
Done.
On that note, 2 Canadians in that one.
Yeah.
Right?
Yeah.
Michael Cera, Seth, what's his name?
Rogen.
Seth Rogen?
Yeah, the guy who's always high.
Yeah, Seth Rogen. He's got a
really hot.
pot company. Did you know that?
Oh, of course he does.
It's called Houseplant.
If you want something hilarious, Google Seth Rogen. Is that right?
Yeah, Seth
right?
Rogen.
Seth Rogen.
Yeah.
Joe Rogan, Seth Rogen. Google Seth Rogen, Burger King, hot burger or something like that, while high.
You know he does the announcements on the SkyTrain in Vancouver, or at least that was the last time I heard it. That's what was.
Oh, that's hilarious! That's awesome.
Yeah.
Yeah. Yeah. So I think it's here. He reveals he basically went and ate. He got really high, had one of these flaming Burger King burgers right before he got on the plane, and then was all messed up. And you know him; he's just brutally honest. Anyways, the guy's funny. The guy's really funny.
I should tell you about my trip when coming back from Vegas when I had an enchilada breakfast before getting on the plane.
Oh my god!
Yeah, but did you smoke a huge fatty like Steph did?
No, but it was a disaster.
You had an enchilada breakfast before you got on the plane.
Yeah, you just.
I'm not going to say anything else. You can.
That just ends badly, no matter what.
Yeah. Well, I watched this.
I got stuck between two stewardess carts.
We don't use the word stewardess anymore. It's flight attendant.
Of course he does.
It's flight attendant.
While he was trying to get his old-fashioned or whatever he was drinking. Lena, another one I watched was Seth Rogen did some sort of cooking show where it's some chef, and he goes around and they go to different restaurants and stuff.
Oh, I think I've seen it on Netflix. I haven't watched it, but I'm trying not to.
Half the show is them sparking up. That's all they do. It's just, I'm okay, let's go spark a doob and then let's go eat somewhere. That's all he does.
Also, they're going to eat all of that,
Yeah. Anyways, listen, this is very quickly, devolving into a terrible conversation. Let's call it a night.
Yeah.
Okay.
Patrick has run out of things to say.
Yeah,
I am.
I can see him. He's on his phone. He's trying to do something else.
I'm texting.
Yeah, it's saying wrap it up. Okay. Have a great weekend, everybody.
All right. Cheers. Have a great weekend, everyone.